Now, in this video, I will give you a broad screener. I call this a stock screener for restless souls. Who are restless souls? Well, I have some students and subscribers. When I give them a filter which has a strict criteria and which gives them around 45 to 50 stocks every day, it takes them less than 10 minutes or 15 minutes to go through those stocks. Now, they feel that they are not putting adequate work. They feel that they are investing less time in doing their scanning. However, they are failing to realize that if you have a filter which is strict and which only gives you around 50 to 55 stocks, it means that that filter is so powerful that it is rejecting 99% of stocks in the stock market. Okay. So some students are failing to realize the value of a high quality filter simply because they feel that they need to do something every day. They want to put effort, like put 1 hour or 1.5 hours doing some scanning, finding some stocks. Warren Buffett has once said that the market does not reward activity, the market rewards you for being right. It's an important concept. The best stocks, in my experience, the best breakout stocks always show up in any filter that you put. Okay, because they have strong technicals, strong fundamentals, and strong comparatives. The comparative analysis, where I talk about relative strength, industry strength, and institutional demand. Okay, the best stocks will come up in any filter. So don't worry. However, there are students whom I call restless souls because they want to spend some time, maybe doing some practice. So I will give you a broad filter. I have given a name to this filter. I call it the Mark Minervini filter. It will give you hundreds of stocks. Okay. And from there, that becomes your universe from which you can start your scanning process. So it will give you all, you will not miss any stock. Plus, also, it will satisfy your need to do something every day. Okay. But please understand, here is a disclaimer: doing something every day doesn't mean that your trading performance will improve. Okay. The higher the quality of your analysis, the better will be your trading performance. Let's have a look at this filter. Okay. By the way, I personally use this filter every weekend. I call it the Mark Minervini filter. Let me open. I will log in. I will hit breakout. So I have created bookmarks here, which makes it very easy for me to navigate. Yeah. So let's go to idea list. And here you have build your screen. I click filter India stocks. And I will tell you the advantage of this filter. That is very important. See, this is the Mark Minervini filter. First, let us try to understand what this filter is. You can start applying this filter if you are a enterprising individual, if you are a restless soul, you feel that you want to do some practice, you want to look at hundreds of charts every day. If you are that kind of person, this video is helpful for you. Okay. So the first filter, this is a non-negotiable criteria. If you read Mark Minervini's book, in that book, he has something called as the trend template, where he gives you the criteria which he has been using for decades. So there he says that the minimum relative strength of the stock should be 70. So whatever stocks you have in the list, they are doing better than 70% of all the stocks in the Indian stock market. You can apply this concept to anywhere, any stock market in the world, not just India. Okay. So this is the basic non-negotiable criteria that Mark Minervini is using, and he has described this in both of his books. First book is Trade Like a Stock Market Wizard, and second is Think and Trade Like a Champion. So this is a non-negotiable criteria. Okay. Next, he talks about the 52-week high and the 52-week low in the same trend template. So let's say this is the 52-week high. You come down 25% from 52-week high. Your current price should be in this range. Okay. That's a criteria, which means you are ensuring that you're investing money or trading a stock which is near the high. You are not bottom fishing. Okay. Next, 52-week low. So if this is the 52-week low, you go up 25%, the stock should be above that 25% level. This filter ensures that you are only trading or investing in stocks which have already recovered a lot from the bottom. Now, we don't know what the bottom is in a stock. So we have to give it time to recover. So if it has recovered more than 25%, then you are buying into a stock which has already started the recovery process. Okay. You are not trying to catch a falling knife. So these two filters are very important. Notice that I did not put the price filter. I did not put the rupee volume filter and the number of shares volume filter, which means this list will have penny stocks. This list will have illiquid stocks. This list will have stocks with less number of shares traded per day. So while doing your analysis, you have to weed out those stocks. When you find a stock which is set up technically well and which also has good fundamentals, but if it doesn't have enough volume, there might be volatility in the stock. So you have to look at all factors. Do not reject a stock just because it has low volume. It could have strong technicals and fundamentals. On the other hand, if a stock has great volume but no technicals or no fundamentals, then you are taking unnecessary risk. So you have to look at each stock in this list on a case by case basis. So this filter is really for the enterprising trader or the enterprising investor or the entrepreneur or the adventurer. Okay, because this will give you hundreds of stocks. There are two approaches to use this filter. One approach is you use this filter, you will get some 500 to 800 stocks on the weekend. Now that becomes your list where you keep eliminating every day. That list is your list for the next week. You will not apply this filter on a daily basis. You will only use this filter on Saturday or Sunday. That is one approach. Another approach, which is a very tedious approach and which is very time consuming. But if you want to do it, you can do it. You can put this filter and you can refresh this every single day. So there might be stocks which have today have a relative strength of 69, but tomorrow they may have relative strength of 71. So those stocks get captured. So if you really want to put that much amount of work, then you can apply this filter on a daily basis, and daily you can scan 500 to 800 stocks. Okay. People like to do that. Those people who have the time, okay, if you want to do this full time, they should be doing this. Okay. Because that is what the best people do. The Mark Minervini in one of his interview has said that majority of his time is spent screening for stocks. He doesn't look at the index. He doesn't try to gauge the market conditions and things like that. He's just looking for opportunities to buy stocks. These two filters are very simple. I'm not discussing them. The price should be above the 50-day moving average, which is the blue line on our chart. The price should be above the 200-day moving average, which is the red line on our chart. Okay. This is the basic criteria. However, this does not ensure that the stock is in stage two. When you actually open the chart, you have to see blue, green, red. The blue is the 50-day simple moving average. It should be above the green line, which is the 150-day simple moving average. And the green line should be above the red line, which is the 200-day simple moving average. And the price itself should be above the blue line, which is the 50-day simple moving average. When price, blue, green, red, when this combination comes, that is a stage two stock. You have to ignore all the stocks which doesn't meet that criteria. Okay. At least that you have to do. That is not non-negotiable. Okay. Let's apply this filter. So only 5 criteria. If you apply this filter, now I will tell you an advantage of using this filter. Okay. Give it some time to open. So I will click here. This is tabular view. I click here, so it will give you the stocks in alphabetical order. So now you see there are 435 stocks. And as I record this video, today is 27th of October, which is Sunday evening. So this becomes my list for next week. If next week I am going to buy any stock, that stock will come from this list. I am not looking at the other stocks. See, remember there are 5,000 stocks in the Indian stock market, out of which I have selected 435. So there are 4,500 stocks or more than 4,500 stocks which I am rejecting. Okay. I am not going to look at those 4,500 stocks in the next week from Monday to Friday. They are out. I am not even looking at them, even if their relative strength improves. Okay. Even if their rankings, ratings are improving during the week, I am not going to look at them because this is the list that I have decided. Any stock that I plan to buy from Monday to Friday, it has to come from this list because this is the list that currently satisfy the strict criteria. Okay, these are the stocks that will develop in the future over the next 4 or 5 days and set up as buying opportunities. Some of these stocks will have red flags on them. Some of these stocks would be in the process of forming a base. Some of these stocks would have already completed the base, but there is no proper buy point. Some of these stocks would have already completed the base and which are ready to buy. Okay. So this list will have a mix of all stocks. My job is to keep eliminating stocks from this list from Monday, Tuesday. I eliminate some stocks on Monday. I eliminate some stocks on Tuesday, Wednesday, and so on. So this is a process of elimination which I can use every single week. Okay. As I said, there are two approaches. Either use this filter on a weekend, on Saturday, Sunday, or you do this daily. Okay, if that will require a lot of patience and a lot of hard work. You might have to spend a couple of hours every day scanning for stocks. And if you have that time, you can do that. Okay. One advantage, 435 stocks. Last Saturday, when I put the same filter, you know how many stocks were there? There were 761 stocks. Now, what does that tell you about the market conditions? It tells you that the market is weak, right? You remember that 52-week high filter, which means that there are more than 300 stocks which probably broke the blue line or the 50-day simple moving average, or there are more than 300 stocks that during the week they probably went below 25%, more than 25% below their 52-week high. So naturally, if you see the Nifty 50 or the Nifty mid cap or small cap index last week, I'm talking about 27 October, and you go back 1 week, you see what happened from Monday to Friday. The markets were falling. Okay. So when markets fall, like if the index is falling like 0.51%, imagine what will happen to stocks. So this number, the change in this number is a gauge of market conditions. So if somebody asks me, Rohit, how is the market doing? I am not saying the market is good or bad. I am just going to say last week this filter gave me 761. This week this filter is giving me 435, which means something is wrong with the market or the market has been weak. So when I give an answer to a question, it is backed by fact and information. I am not giving my opinion. I am just reporting the fact to you. So if you ask me today, Rohit, what do you think? Why did the market go down last week? I don't know. Okay. Read the newspaper, read the websites, everything. I don't care why the market went down, but I know that the market was down. And overall, on a broad basis, a lot of stocks have broken their 50-day simple moving average. Otherwise, they would have come in this list. Also, a lot of stocks have broken more than 25% below the 52-week high. Otherwise, they would have come in this list. So going from 761 to 435 indicates a huge downfall in the market. If this number was 450 last week and now it is 435, it doesn't make much difference. It means the market was not that bad. Okay, you understand what I'm saying? So I don't look at the index to gauge market conditions. I look at this number to give me an idea what is happening. Plus, if you click here, price change. Okay. You see how stocks, this is the price change uh, on Friday. Okay. This is the latest price change. See how many stocks are in the red. Just check how many stocks are in the red. Majority of the stocks were down. See where the blue starts. It starts here. So out of maybe 435, more than 200, 300 were in red, closed in red. What does that tell you about the market? Well, the market has been weak overall. So this is the advantage of using a broad filter. Okay. So that's what I wanted to convey. So if you belong to that category of restless souls, you want to do some activity, you want to show to yourself that you are doing some hard work, please use this filter. This will help you. You will not miss any stock because this is a very broad filter. With a strict filter, what happens is, let's say you want a stock with a relative strength of 80 or more. Now you will miss all the stocks which have a relative strength of 79. Correct? So those filters are very strict. Okay. You have to be very unemotional about it. But this filter is very broad. Even if a stock has a relative strength of, see, this is 76 relative strength, it shows up in the filter. Now, during the week, this 76 might become 82. So you don't miss out on this stock. You can catch these stocks early. One last point before I finish the video is the tighter your filter, the lesser is your risk. The more broad your filter, the higher your risk. Now, if you have been watching my videos for some time, you will understand what I'm saying. Whatever I teach, it is all from in the context of risk management. This video is about increasing your risk, not decreasing your risk. But this video is also about being more thoughtful in your trading process. Okay, so I hope this video has added value to your trading journey. Please continue supporting this channel. I thank you so much for your time. Hit like, comment, and share so that this video reaches those people who genuinely want to become professional stock traders. Again, thank you so much for your time. Thank you so much for your support. See you tomorrow.